What's up, motherfuckers? Throwing together a quick update video. The update videos are probably going to be a little bit more frequent now that we're approaching the end of the road for AMC. Not promising to upload every single day, but they're going to be more frequent than they've been in the recent past. And that's pretty much it. I don't really have much to say other than what a great start to the week all around. We could start with S&P 500, which formed another new 52-week high today. Local high 476.58, breaking through that resistance at 476. Did not close above it, but is working its way back towards it right now after hours. This looks absolutely amazing. The high of day today, roughly $3 away from all-time highs. I said yesterday that I expect S&P 500 to find new all-time highs this week, and that is a great start. We're still looking for a gap up here. I'm assuming when we do see that all-time high, the new all-time high, we will be seeing that gap up. And that's probably going to coincide with a lot of other tickers, AMC included, and that would be our macro break. So far, so good. Great start to the week. New 52-week high for SPY, roughly $3 away from all-time highs. We will be seeing all-time highs more than likely this week, and if we don't, then almost definitely we'll be seeing it next week. But this looks great. Would love to see more continuation here, breaking through 476 and holding that as support. And once we do break 476, we should see all-time highs relatively fast, as it is pretty much just air up here where we are right now. There's not much resistance up here whatsoever. So this looks good. Moving on from that to Russell 2000, IWM, which had a very solid day today, breaking out of this $200 level here. High of day, 204.58, I believe. This looks great. This is a breakout for IWM. I would love to see more continuation to the upside here. That's what we're looking for. That's what I'm expecting. And with that, small caps will probably be picking up some momentum as well. I mentioned IWM was lagging behind the other indices slightly, but it is in the process, not even in the process, it did just break out of this parallel channel here at $200. We're looking for continuation and new all-time highs here as well. I mentioned Dow and NASDAQ both already saw all-time highs. SPY, another new 52-week high today, $3 away from all-time highs. And IWM, again, is lagging behind, but just broke out of this parallel channel that it spent almost a year in. Almost 2 years actually in this parallel channel here. It just broke out recently, and a very solid day today. 204 and change, looking for more upside here, looking for all-time highs here as well. Getting into AMC really quick and starting with the macro, it's all the same, yada yada. Green and yellow is your January and June peak equivalents. Green and yellow, January and June peak equivalents. I don't know why I don't have the green here. But then V-shape, macro break, V-shape, macro break, which is the gap down from the top, this sideways consolidation pattern on both sides, and then falling off of a cliff into the downtrend. The downtrend takes you pretty much all the way down to zero, which is where we are now, currently playing out a flat portion in a very, very tight range and much more faster than what we saw previously from 2020 to 2021. Going through the downtrends now, I'm going to do it how I've been doing it recently, just the chart with all the noise gone here, just looking strictly at the downtrend. So again, macro break, gap down in the blue box here, sideways consolidation pattern, and then falling off a cliff into your downtrend. Your first bottom, working your way up to resistance. That is your first touch on the resistance, macro resistance. Over here, same thing, your first bottom, finding your way back up to your macro resistance trend. That's your first touch. Coming down again for your second touch, and same thing over here. So that is clean rejections on your first and second touch on both sides. And then you do not find the macro resistance again until the flat portion here, where you have the fake out move, which breaks above it. That is your third touch on the resistance, and same thing over here. Not finding the macro resistance until right here, the July gap up that we saw, our third touch on the resistance, and then dropping down to where we are now and approaching the macro resistance for the fourth time. And that fourth touch will be the breakout and the squeeze that we're looking for. We are looking for straight line volatility once we break our macro resistance. Again, the previous macro took off in January of 2021, and we're lining up for the same thing here, January of 2024. And of course, zero is right below us. So this looks very, very good. We're getting very close to this trend. Very, very close to this trend. Moving to the right every single day. Macro resistance is dropping rapidly every single day. We are getting very, very close to this trend. Now getting into that, the macro halt line and the two scenarios that I see that are possible here. I have two different trend lines. I talked about that yesterday as well. The white is a valid trend line. It's possible. It's just the red. The red is the more conservative. It's the most conservative trend line that you can draw here. And in hitting these top two wicks here, the red trend line is actually pulling off of these wicks, whereas the white one is clean rejections off here. But then you have the wicks through here for the white. So it really just depends on which one is the actual macro resistance trend, which we will find out tomorrow, because the white trend, we're sitting right up against it. Again, big swings here all the way through the downtrend on very low volume. And then where we are now, completely flatlined, we are sitting at all-time high volume. This looks absolutely perfect. And again, zero is right below us. This is do or die for AMC, break out and squeeze, or reject and go to zero. Which, I mean, it's pretty simple here. AMC is not going to zero, so that makes this very simple. We'll be breaking our macro resistance and straight lining into our squeeze. Zooming in on the macro resistance trend now. This is what I was talking about before with the white trend line. We are sitting right up against it right now. Pretty much fighting for 619 all day today, 620. Couldn't quite get it. And we are right up against this white trend here. If this is in fact our macro resistance, the next 4-hour candle that we get here will be poking us out. And that said, that would be a breakout of a macro resistance trend, and we'd be looking for a big move to the upside. That straight line volatility that I was talking about, which tomorrow is 7 trading days post OPEX. So it is a potential peak target. I'm not saying that we are peaking tomorrow. There are a few different ways this can play out, but tomorrow is a peak target, and we are sitting right up against this resistance trend here. The red trend line is the more conservative, and this is a week away. So this, just going flat here, we would meet the red macro resistance trend. That would be next Thursday, January 4th, I believe. And so pretty much the scenarios, the way I see it here is, number one, we could actually reject here and form a deeper spring. I don't really know how likely that is. I think we continue to the upside here. I think at the very least we would form an uptrend here and work our way into the red resistance trend. So again, tomorrow is 7 trading days post OPEX. Possibly we get that gap up pre-market, which is our peak target, 7 trading days post OPEX. We'll see if that theory actually holds any weight. Number two, we could reject here off this white trend, form a deeper spring. If that was the case, then I definitely would not be expecting any type of intraday uptrend. It would just be a gap up. Or scenario 3 is that we just continue an uptrend here intraday into the red resistance trend, which would pretty much be taking us into next week, meeting this trend roughly Thursday or Friday next week. And then again, zero is this red bold line right below us, which our macro resistance trends are intersecting zero in January. Middle and late January, these two trends will be intersecting zero. So with that being said, the options are very simple here. We either reject and go to zero, which I don't see a world that happens, especially with the direction AMC is heading fundamentally, everything that we have going on, coming off of the best quarterly earnings that we've ever had in company history. So again, scenario 1 would be going to zero, which we could pretty much rule that out. And then scenario 2 would be breaking our macro resistance to the upside, the exact same way that we saw in January of 2021, and then looking for straight line volatility. And we would be expecting higher price targets here as well. My price target of $1,400, the 3.618 fib, or the Fibonacci spiral target of $2,600. Those are the two options. How long that plays out, how long it takes to get that, those are the two targets that we're looking for to the upside. And that's it. Again, once we break this macro resistance trend, whether it's the red or the white, we're looking for straight line volatility and a huge surge in volume, probably billions in volume. So that is that. And I think, yeah, I went over the scenarios. The conservative trend line, we meet next Thursday. If we're just dead flat, we meet this next Thursday, Friday, January 4th or January 5th. If it is in fact the white trend, we're sitting right up against it right now. Gapping up tomorrow, on the table, no matter how likely that might be. It is on the table, and tomorrow is 7 trading days post OPEX, so a potential peak target as well. Again, the OPEX thing is just a theory as of right now, but it is also a 100% hit rate, so it cannot be ignored in my opinion. But this looks great. Now, moving on from that and getting into the Wyckoff, I showed this yesterday. I have it updated now, so everything's marked again. Preliminary supply, selling climax, automatic rally, sell test, same on both sides. The push towards the resistance and the range, and then coming down here, this would have been our second bottom, slightly lower than the selling climax. We did not get the bounce up to the automatic rally because of the macro resistance, but here it is, and then coming down for the spring now. And this is what I was mentioning previously, where we could potentially, if this was our macro resistance, the black line here, we could actually reject here and spring a little bit deeper. In that case, I would then be expecting just a gap up with no intraday uptrend. The other scenario here is that we actually do have an intraday uptrend. We reclaim support. This black line would then not be our macro resistance. It would be the red line, the more conservative. We would uptrend, reclaim support here, just moving to the right, moving higher, forming an uptrend into our macro resistance. And then once we broke this, then we would be looking for that straight line volatility. No matter which way you slice it, we're at the end of the road here. So it looks good. And then the side-by-side, the previous flat portion of January 2020 to January of 2021 when we squeezed, compared to the current flat portion of where we are approaching our macro resistance, whichever one that might be, the red or the black trend here. And then it's all the same movements. Everything's marked here. And we would be coming off of our spring currently. This isn't updated, by the way, but we would be coming off of our spring, which is our third bottom all-time low. I mentioned we're playing out a flat portion. I'm going to show you the flat portion that we played out from 2023 until the July move, but this is just looking at the previous, before the January 2021 squeeze here. You have your first bottom, you have your bigger tri-peak in the middle, first bottom, bigger tri-peak in the middle, your second bottom, the smaller tri-peak, which again, it did not come up to the range here of $9, the automatic rally, because of the macro resistance, how much we're being pinched down. And then your third bottom all-time low is the spring. That's where we are now. And this is what I was saying before, where potentially we do have an intraday uptrend here to reclaim support, and then we would get that gap up over the macro resistance trend, and then just straight line like that. That would be taking us into first or second week January, and first week January, because we'd be meeting this next week. Or 7 trading days post OPEX is tomorrow, and this red trend would in fact be the macro resistance, and then we would just gap up pre-market. It is a possibility, I'm just mentioning it. So that is that. Now, I mentioned this yesterday. I'll really quickly go over it again, where we are playing out another flat portion here. So the same flat portion that we played out from 2020 to 2021 when we broke our macro resistance and we squeezed this flat portion, we played it out from 2023 until July, which was the fake out move. And then we dropped lower, and now we're playing out another flat portion right here, approaching the macro resistance the exact same way that we saw in July. So let me show you what I mean by that, just zooming in on this with everything marked now. This was, on the left, the flat portion that we played out from 2023 until the gap up in July. So you have your first bottom here, you have the bigger tri-peak in the middle. Your first bottom, the bigger tri-peak in the middle, and then you get your second bottom, which is slightly lower on both sides, and then you have the smaller tri-peak that we played out here. Now, the way it played out leading up to July, and again, this wick down would be the spring, which did not come lower than the second bottom, but this whole time we were looking for a lower low here. We were looking for the spring. And that's what we're seeing now. This lower low is playing out as it should. This is the spring. The way it played out in July is this tri-peak, the smaller one, you actually break out of that, this resistance, which this would be our micro resistance that I've been talking about. Potentially what we would see here is an intraday uptrend to break out of this micro resistance in red here, retest on that, and that would take us right to our macro resistance trend. And then we'd be looking for a gap up exactly how we saw in July, except this time it would not stop, it would just go to the top. So again, we're playing out a flat portion just like we did previously leading to July, where we met our macro resistance. We're playing it out again and approaching our macro resistance again. And that was the same flat portion that we played out in January of 2020 to January of 2021, this flat portion that took us to our macro resistance. We broke it and we squeezed, just like we did in January of 2023. We played out a flat portion approaching macro resistance. We got the fake out move, the gap up, and now we are playing out another flat portion even lower, approaching the macro resistance the exact same way. And again, the two scenarios here are rejecting the macro resistance, go to zero, which is no, that's not happening. So we're going to be breaking this macro resistance and squeezing. So it looks really good. And then indicators really quick. RSI is still sitting at 29 on the weekly. This is kind of ridiculous at this point. Just almost 6 months here oversold on the weekly RSI. OBV, which did recently form new all-time highs, is retesting the trend again. So that's 1, 2, and 3 retests now. This descending trend on OBV. And then volume, of course, is sitting at all-time high levels. So our January squeeze was all-time high volume. And then descending volume all the way through the macro, through all of the selling, descending volume until the end of the macro, where it's picking up exactly how we saw back here. Descending volume until the end, the volume starts to pick up, although you can't really see it. Starts to pick up here into the squeeze is all-time high volume. So that's what we're going to be looking for again, is all-time high volume on this squeeze. And then on the weekly, we're just approaching our all-time low landmark like we see here. Again, the macro in the downtrend is just forming lower highs and lower lows all the way down until this point right here is your all-time low landmark. And once the bottom is in, it's an uptrend directly to the top, is pretty much the most simple way I can put it. So if the bottom is in here, if the spring is done, we will be expecting an uptrend from where we're sitting right now directly to the top. No matter how it plays out, that's what we're going to be looking for. But I mentioned it is possible we do have a deeper spring. I think it's unlikely, but it is on the table. And that would be taking us to mid $5 range. I think that's it for the video. I mean, we are getting very, very close. Like I said, every single day we are moving to the right. And with that, every single day, both of these macro resistance trends are dropping rapidly, almost 50 cents per day. The more conservative trend in red, this trend line will be sitting at roughly $7.20 end of week. Next week I think it will be in the $5 range next week. So this is, like I said, it's do or die. It's quite literally do or die for AMC. Where they're going to be breaking this and seeing the craziest, most volatile squeeze you've ever seen, or we will be rejecting off of it and heading towards zero again. That's just not going to happen. Not financial advice, but we're not going to zero. And with that, there's just market wide. Everything is synced up. Indices look great. If they're not at all-time highs already, Dow and NASDAQ both at all-time highs. SPY is going to see it very shortly, very possibly this week. And IWM recently broke out. We're looking for upside there. So all the indices look good. And then just market-wide, blue chips look great. Crypto looks good. And now we're going to be looking for small caps to catch up as IWM just broke out as well. However you slice this, however you want to look at this, we're at the end of the road here. This can has been kicked all the way down to the end of the road, and there is nowhere left to go. It is either break the trend and squeeze or reject it and go to zero. And I know where my bet is. So with that being said, that is everything for today's video. I would love to see more upside tomorrow in AMC. If we don't gap up pre-market, I would love to form an uptrend here. I would love for this spring to have bottomed here and to form an uptrend here, start working our way into the macro resistance. If the trend isn't the white one, we'll know tomorrow because we'd be looking for very volatile price action tomorrow. So if it's not, we could just rule this one out, and then we have our conservative trend in red, which we will be meeting mid to late next week. So this looks good. Everything looks great. I'm fucking bullish. I am the most bullish I've been since I've been on YouTube. I am bullish as fuck, and I very excited. I'm very excited for the days to come. Everything looks great. So with that being said, I will potentially catch you guys with an update tomorrow, depending on the price action. If not, worst case, I'll be making an end of week recap video. So I'll catch you in the next one.